Evening all. I'm Epstein, and here we are with your metal market update. And this update is for Monday, the 26th of August, 2024, 6:05 p.m. Central Time. Now, tomorrow we're going to be getting the Red Book update for their weekly U.S. retail sales. Case-Shiller 20 Metro home prices in May. These are June, so they're much older. But in May, the prices were up 6.8% year over year and up 1% month over month. We'll see if they held up at all. You know that they're probably higher, but the question is how many really sold. The Conference Board U.S. Consumer Confidence Index number will come out at 9 in the morning, and API, well, they're going to give us their estimates at 3:30 in the afternoon. But what this really is about in some of the markets is the lead up to, believe it or not, even in the futures markets, NVIDIA, because it weighs so much on the stock market. We're going to get their earnings after the close on Wednesday, so keep that in the back of your mind. Second thing you have to look at in the market is, we just completed Jackson Hole. So over the weekend, traders had a chance to say to themselves, okay, do I have to get myself back into the stock market because the Fed is embarking on a cycle of cutting interest rates? That's the first thought. Metal markets, well, gold did go up for a high, and you'll see that in a minute here. Silver, copper, and platinum backing off a little bit tonight. The dollar finished up a tad higher. You can see you've got a mixed bag in the currency markets. Don't get lost on the fact this week that it's a thinner trading week. You got people leaving for the last holiday, Labor Day. Some won't leave anywhere, but they're just going to take off some time and make it a nice long weekend and come back sometime next week. Keep that in the back of your mind. Bonds and notes, getting yourself, well, they went up a fraction today. They're backing off a little bit tonight. And I'm still thinking cotton here looks to me a bit overpriced. All right. Especially when I take into account how poor China is doing. And if you were watching Temu, the company that owns it, it was down 28% today. That's big, big deal. In the gold market, you can see what I'm saying. On a first day of the new week, here we are on a weekly chart up $9.3 at this point, even with gold down a little tonight. You can see how the market came back up. On a settlement basis, that was about the highest settlement that we've had. What's the pattern? Well, you can see it. It's clear. It's higher lows, higher highs. Now, it's been easier to trade this for whatever chart reason. Is GLD than the futures market. You get more leverage, obviously, in the futures, but GLD has been the easier play. I still think the trade will buy this market on pullbacks in here. Support's now at 25.0260. You really don't want to take out that low. So what I don't like in the setup is if you fell back there, you wouldn't keep the pattern of higher lows, higher highs. In terms of the Bollinger Band, it stopped this rally. The market backed off. I did think the pros were buying at that time, and you've had a continuation of the rally. And now the question is, can you embed? You cannot count today's numbers when you do that because you don't know where Tuesday's going to end up. So I backed the chart off, and I go to Monday. Both numbers were over 80. Both were over 80 on Friday. I don't think that was the case, though, and it wasn't on Thursday. So tomorrow is the key day if you're going to embed. When you embed, it's saying that a market's converting itself from being overbought into locking in a bullish trend. Often on the day it's going to embed, it tries to pull back on that day if the embedding is bullish, or rally on a day where the market is bearish. We'll see how it all works out. Right now, you're getting just what I said. You're down $2. We'll see what the market does with that. In the gold-silver ratio, as the numbers keep falling to lower numbers, it means silver's worth a bit more than gold at this point in time, and that's what's going on. You can see that the trend is still up. Higher lows, higher highs, not yet in the embedding status, just not there yet, can't do it tomorrow. In the copper market, overbought. You've had a nice run up in this market, as you can see. What had been a question, and it's still there to a degree, is the first move up and over right here, this 200-day average, and the market is absorbing all that. What's interesting is this is taking place with still news out of China as to how weak things are. We have not seen the government government do anything major to spur on demand in this market. Part of this was arbitrage that got it going between the London Metal Exchange and the COMEX is going on, and the difference in prices. But I think that part's probably somewhat gone at this stage. So copper's got an upside bias right now. In the platinum market, I think you take a look at where you went today. And that's where I think the pros, if they were in this market, were taking some money off the table. Your first challenge of the 100-day average, the upper Bollinger Band with an overbought condition, so long. Thinner conditions, where you going? You think you're going to stay over that? Only 5% of the time do you do. And when you get wide Bollinger Bands like that, not real narrow ones, the odds on that first run up to it, strong that it'll back off somewhat. Then we get to the dollar index, which has been running the lower Bollinger Band. You know why this is occurring. You know there's more rate cuts coming. You know that the Fed is now giving itself a focus on labor, of all things. It's no longer, the Fed chair said this. He said that now the eyes are turning on labor, and they don't want to see labor fall anymore. Today, Mary Daly of the San Francisco Fed came out, and she said the identical thing. That the labor market, she thinks, is in much better balance, but she doesn't want to see the uptick. So if you're trying to figure out what the Fed's going to do in September, I realize Friday we have a PCE number, but I don't think that's going to determine it. I think it's going to be a week from Friday's, I think it's September 6th, that we're going to get the jobs report. And that's the number you want to look at. It's not going to be the raw number, in my opinion. It's going to be the percentage. You're at 4.3% unemployment, 4.4, 4.5. I think the Fed goes like that to 50 points. 4.3, 4.2, or 4%. I think the Fed goes to a quarter point to get ahead of things and do with what the Fed chair said, get on with the first cut. So I think any way you go, you're going to get a cut. You can argue whether you need that or not, but that's what I think will happen. And it's just a degree of the severity of it at this point in time. We discussed this, and I discuss a lot more, if you take a look at the free offers that we have. First of all, in price counts. Let me tell you how I use those. That was the offer that just went by. The Linn Group years ago developed a proprietary formula that you can use on our charting software, by the way, to figure out when a trend sets in. Did you hear what I said? It doesn't determine the trend. But the hardest thing when you get a trend is where might it go? And their formula, I have found over the years, at first I didn't believe it. And then I became, like I do in Bollinger Bands, a rock-solid believer that this is something you don't see anywhere else, and it gives you an idea where markets are going to pause to decide, are they going to continue with the move or not, and where it might go. How do you get all these offers? You see this blue when you go to the page, Epstein.com, free offers. Just give it a click. Click on the different ones that you want in here, and then it comes to us as an email at Ira Epstein, and then we will send that on to you. Simple to do, IraEpstein.com. One other simple way. If you're on your PC, if you move your cursor to the top, you'll see an icon. Give that a click. It'll take you right to that page. I'm Ira. See you first thing in the morning. Take care.